Hi everyone, my name is Peter. I'm at our 18-bedroom student accommodation in Stoke called Infinity House. I'm just on the ground floor and there's still a little bit of work to do just to get it up and running. Upstairs, some of the rooms are all carpeted, but down here on the ground floor, this room has just been sprayed. And if I go to the next room, still needs to be painted. I thought I'll take this opportunity just to answer some questions that a lot of friends and family have come to me and asked me about. So I thought I'll just go through about those who have owned their own property, have their own home, and wanting to buy their first investment property. And they come to me and they say, okay, should I do it? Where should I buy it? What should I do? And I guess the advice I'd like to just say is it's not a quick answer. It depends on you. It depends on your long-term goals. If you look at my other posts in the past, you'll notice that I've said that a lot. But if you're going to look into it, the first two things to really look into is, first of all, your tax. Understand where your tax liability is. So if you were to buy another property in your own name, what that means for you at the end of the year when you have to do your tax return. Are you going to make £10,000 of rental income, but are you going to be paying 15,000 in tax? That isn't going to work. And you'll notice that if you Googled Section 24, as of next year in 2020 in UK, that is going to impact a lot of people, portfolio landlords or those who have a big mortgage on their properties, especially in London. So point number one is understand your tax liability and seeing what options you have. When you look into that, the second point I'd like to just mention is a lot of people will then start noticing or learning that opening up a limited company is really beneficial from a tax perspective. Yes, that's true. It is fantastic. However, you really need to talk to a tax advisor or an accountant about this. Do talk to other property investors as well. They will be able to signpost you a bit of thing and give you more insights for you to think about. But ultimately, a tax advisor will be able to give you the best strategy with regards to tax for yourself. Now, having said that, with regards to this second point about limited company, from a property investor's perspective, you also need to be thinking about your lending opportunities. So you can open a company very easily, but the question is, can you get lending on that property in that company? Now, the company and you are two separate entities. You have your own personal track record. This brand new company, it has zero track record. So lenders will often look at you as a person, as a director. What is the risk of giving money to this company? Will they make a return? If you've got experience with other investment properties, you often have more lending opportunities and better rates. If you have zero investment experience, i.e. you just have your own home and zero investment properties, there's a very high chance you have very limited lending. The lenders that may want to work with you could be very expensive, so very high fees just to get involved, and very high interest rates. So instead of maybe the typical 3 or 4% at the moment, you could be paying up to 6, 7, or even 8% just to get lending for a limited company. So these are other factors that you'll learn by talking to more property investors and also talking to a broker. But purely from a tax perspective, that's sort of where you first need to start. Just to summarize, if you're looking at buying your first investment property, understand your tax situation, then understand the challenges with a limited company. So you'll know the benefits, but also learn the challenges. Hopefully that's helpful. Thank you.